Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Kayar. It's a new high for the Nifty yet again. We see one down day and then the markets come back, and how. It's a lot of these consumption names which are contributing. We do have earnings which have started trickling in, at least from the mid-cap space. But this is a week where we'll get the big earnings as well, so a lot to track.
Lot to track. IT will be in focus, especially towards the later half of the week, given the fact that you'll have so many of the IT companies that are going ahead and giving their numbers. Quite a lot lined up on the show. Let's start off with the top headlines today. Stocks trade firm. The Nifty hits a fresh record high. Auto and PSU banks are the prominent gainers, while metal, IT, along with oil and gas drag. Midcaps relatively underperformed.
Some of the chemical sector stocks surge after positive commentary from UBS. The brokerage issues a buy call with a target of 4,800 rupees for PI Industries and a target of 4,250 rupees for Navin Fluorine. They say pressure from China capacity additions may have peaked out for the sector.
Tea stocks like Harrison Malayalam, Jewellery Tea and McLeod Russell surged between 10 and 15% after tea production declines due to the extreme weather conditions. India production in the month of May declines by 30%, while prices surged 20% on a year-on-year basis.
CESC surges over 6% after it hikes its tariffs in the Kolkata circle, levies fuel adjustment charge at 40 paise per unit. IIFL says the tariffs should be good to cover CES incremental fuel costs and ensure complete cost recovery. Okay, all right, those are the top headlines for the markets. It is a 100-point uptick for the Nifty today. We are above the 24,400 mark at the day's high. It is not led by banks. It is not led by any other major heavyweight, but by a consumption name. So the Nifty consumption index, that is higher. We have the auto names which are doing really well, Maruti being the top gainer today. What is not doing so well is the metal index, which is slightly in the red. The energy index is also coming for some profit booking, but mid-caps are doing very well, 0.2% higher there. Of course, it is still underperforming the benchmarks, but it is turning out to be a decent day. It has come off from the highs, and the advance decline ratio for now is in the favor of advances.
In favor of advances, we're also seeing, data that's come in from Amphi as far as the mutual fund is concerned. We'll, discuss that in greater depth going forward in the show. But at this point of time, it's a record monthly. Just looking at the numbers, the net equity inflow is at over 40,252 crore, and this is higher by almost 6,000 crore on a month-on-month basis. So it's a very strong number at the offset. It's
a record monthly flow, and that is something that we saw last month as well. That is what we spoke about, that it was highest ever inflow figure in the equity funds. And again, that is the case this time as well. Net equity inflow has come in at 40,252 crore rupees, which actually compares with a number of around 34,670 crore rupees in the month of May itself. It has been consistently increasing, and number of 40,000 crore rupees, as we've been talking about it being at record high, has not been seen earlier at all. So looking good for the equity funds for sure, and that is something we've seen in the markets as well. The recovery that we saw after that 4th of June number and the election results as well, that has continued into flows into equity funds as well. Of course, we'll want to know what the large cap figure has looked like, what the small cap figure has looked like as well. And we'll get in reactions as well in just a bit. But
also
for now, the initial
track will be the monthly SIP number.
That is always important to track, of course. That is the important number. And it will be out at 2 p.m. in the conference call. So that is what we'll be awaiting. We are awaiting for more numbers as well. I'll just take a look quickly because there are a whole host of numbers that we have to look at. We'll go to that in just a bit and talk about it in greater detail. But let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Thank you so much for joining us. Well, if you can quickly tell us the levels to watch out for on the Nifty and individual technical picks as well.
Yeah, good afternoon, Sonal. Good afternoon, everyone. I think, the markets are they are in the range. I'm not expecting any major activity on either side. But yes, if there is any correction in the market, then close to 24,200, 24,100, the market is having excellent support. So there we can look for adding some index heavyweight stocks. But at these levels, the rotational activity is on, and we are seeing broad-based activity. Yesterday, oil and gas stocks were in limelight. Today, we are seeing some activity in FMCG and consumption-related companies. So the broad-based activity is still doing much better. And I think if we just go through with the any specific stock, then in that we like Max Financial. MFSL, which is currently quoting around some 1010, 1015. MFSL is like into breakout mode, and it has spent a lot of time within the range of 1020 and 980 on the downside. Based on its technical formation, the next level to watch out for would be somewhere close to 1080 or 1100. So Max Financial is a buy at current levels with a stop loss close to 990. And the other stock on which actually Vivek was also talking, that is latent view. I'm going to say all these IT companies, they are finding some support, and we are seeing some buying interest in IT companies. So in that, latent view looks good at current levels around 520. There we are expecting target somewhere close to 560 or 570. So it's a buy at current levels with a stop loss close to 490 on the downside.
Okay, all right. Thank you so much, Srikanth. So we have some more numbers coming in on the Amphi data. The large cap funds have seen an inflow of 970 crore rupees, which compares with an inflow of 663 crore rupees. It's quite understandable because of the way Nifty has moved. We've seen that big move on Reliance Industries. We've seen that big move in some of these IT names. So the sectoral rotation is something that is seen in these numbers as well in the large caps. Small cap funds have seen an inflow, yes, but it has seen a decline versus the last month. So 2,263 crore rupees versus 2,724 crore rupees. That's the month-on-month number. The mid-cap flows also have slightly ebbed on a month-on-month basis. It just goes on to show how money is flowing back into large caps. Some of these bigger names that we've been talking about, the consumption names, be it HUL, be it the likes of Britannia and the other buzzing stocks in that particular sector. If we talk about one theme that has continued to do well, it's the sectoral or the thematic funds. There, the inflows have come in at 22,351 crore rupees. And you know, that is a big number. There have been a lot of NFOs. There was the Mirae Automotive Fund, the SBI Automotive Fund as well. All of these sectors, sectoral funds, are something which are putting a lot of money into the space as well. And that's why sectoral or thematic funds have done really well. So 22,351 crore rupees, that is the big number that we should talk about. There were 17 NFOs that mobilized inflows worth 15,227 crore rupees in the month of June. And that's why we are seeing that big number on the equity side as well. And we are seeing that big number in the sectoral funds as well. That's a very important number, and the graph for that should also come up for you on the screen. Apart from that, the dividend yield funds, 520 crore rupees is the inflow there. We'll just watch out for the debt funds as well, how they've done. But overall, it's a decent number, and the NFO rush is something for sure that is aided to all the numbers that we've been seeing. New fund offers, just look at that. It's 15,227 crore rupees, which compares with 10,140 crore rupees. Hybrid funds have actually seen a lower inflow this time around of 8,855 crore rupees, which compares with 17,990 crore rupees. Now remember, when people were not investing or very confused about where to invest, hybrid was one category which was doing really well, but that has seen inflows ebb a little in the month of June. Liquid funds continue to do well. There is an outflow again of 80,354 crore rupees. ETFs have seen an inflow of around 9,134 crore rupees. But again, as we said, we'll be discussing it with our guest very soon. But okay, so we do have Sandeep Bagla of Trust Mutual Fund joining us now. Sandeep, good afternoon. Thank you so much for joining us. Well, it looks like a lot of these flows are led by NFOs as well. But what do you make of the initial numbers? We have large caps seeing higher inflows, mid and small caps seeing some ebbing of flows here.
Yeah, so, the lion's share of the money has been mobilized through sectoral funds. So people are basically taking concentrated bets on specific themes. And I think people have invested in diversified funds for so long. So I think this is a good, diversification in the sense that people are taking now specific bets for the next 3 to 5 years, I guess. So even with the NFOs, and I think post NFOs also, these funds would have grown in size.
Sandeep, what's actually quite stark in this particular monthly number is the fact that the pace of inflows that were very strong both in the mid-cap and small-cap category seems to have just slowed off a little bit. What do you attribute that to? Is it purely, the kind of levels that those, indices are, or is there more risk-reward favor in, towards the large-cap funds?
No. So investing is, there is always some element of a flavor of the season. So I guess, there are a lot of expectations from the budget. See, if you look at the thematic funds also, and the sectoral funds, they will have an element, a very large element and component of small and mid-cap stocks. So I don't think it is only the valuation which matters here. I think the entire distribution industry is concentrating on the new themes, and people are very confident of the themes like defense, consumption, manufacturing, and all these schemes are now attracting investor attention and some distribution push also. So it is not the valuation, I think it is more diversification from an investor's perspective and taking some specific bets on specific sectors, probably with the budget in mind, probably with the announcements that are likely to come and benefit for the industries for the next 3 to 5 years.
The way we've seen that money flow into NFOs and the new fund offerings in the month of June and even last couple of months, that just speaks about how much there is appetite for newer themes. This time around it was automotive. Now we have the energy fund coming in from ICICI Pru. We'll have to see what kind of reaction it gets. But yes, definitely NFOs are driving a lot of money. Hybrid category, that is one category I want to speak to you about, Sandeep, because it has seen a decline, around 8,000 crore rupees of flows versus almost 17,000 crore rupees last month. What explains this fall? Because usually, or after whatever changes happen with debt funds, or because of all the confusion, people were like, okay, let's move to hybrid. This would be a safe category. What do you make of that?
I think it reflects basically the growing confidence in Indian markets. See, the Nifty returns has been spectacular. Mid-cap, small-cap returns have been no less than spectacular this last month. And if you look at the current calendar year, so current calendar year, I think mid-cap and small-caps have given a return of almost 20 to 22% at the index level. So that is giving a lot of confidence to investors. And the incremental allocation is tilted towards greater risk. So, which is why probably the hybrid schemes are getting lesser allocation. And it is a part of, the momentum trade that, you would like to be more with the market. You would like to take greater equity exposure. And so far, it has been paying off quite smartly.
Sandeep, one more important aspect will be the SIP numbers that will be out shortly, when AMFI hosts the call. April onwards, we've actually seen the number trend over 20,000 crore on a monthly basis. Given that is sticky money, do you see that particular trend continuing, or at these elevated levels, do you feel there could be some slowdown as far as fresh inflows are concerned?
No, I don't see that number coming down. There is a whole machinery which is working towards mobilization of SIPs. And also, investors, some of the investors, you'll be surprised to know that they believe that the SIP is a separate category of investments. They disassociate it with mutual funds as a category. So they believe they are investing in SIPs, and SIPs has gathered a momentum of its own. So I don't see SIPs coming down at all, unless there is some liquidity tightness or there's some big shift in consumer investor preference. I think this will continue to go for at least few more months to come.
Okay, all right, Sandeep, thank you for your take. In fact, we also have one more guest joining us, Suresh Soni of Baroda BNP Paribas Mutual Fund joining us now. Suresh, good afternoon. Thank you so much for joining us. Well, just wanted your take on the mutual fund numbers, the higher inflows in the large caps, big flow into the equity funds overall. Do you think it's driven by what we have seen with NFOs and sectoral funds, or do you think this could be a sustainable trend going forward?
Sure. So first of all, the overall AUM has touched a new high of 60 lakh crores. So if you just look at it, the industry just about 10 years back used to be 10 lakh crores industry. So it took us about 50 years from start of UTI to about May 2014 to reach a total landmark number of 10 lakh crores. And just in the last about 7 months, from December till about end of June, that's about 6 months, we have added fresh 10 lakh crores from 50 lakh crores to 60 lakh crores. So I think this is a good momentum that we are witnessing now in the mutual fund flows, where the previous 10 lakh from 40 to 50 came in about 13 months. And the last 10 lakhs from 50 to 60 came in just about 6 months. This is essentially on the back of increased awareness in the investors, increased participation that we are witnessing, and as well as the culture of SIP that we have started seeing. And that has continued consistently at about 20,000 crore plus for the last several months. And that is leading to a sustained inflow into the market.
Okay. Thank you so much, Suresh, as well as Sandeep, for joining us. It's a very good set of numbers, at least as the first take. We'll wait for what the actual monthly SIP numbers are as well. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. One particular trend that yesterday we highlighted, and especially some of the railway stocks that we highlighted yesterday, we told you about how some of them were trading at quite high valuations, and the kind of run-up that these stocks had seen had been quite high, especially in the last month and the last year. Today, a lot of these railway stocks especially are seeing quite a bit of a sell-off, in fact seeing quite a bit of profit booking from high levels. So if you look at the intraday chart of names like RVNL, Ircon, RITES, IRFC, all of them seems to have cooled off from the day's highest point. They had opened up in the green, but today you are seeing certain amount of sell-off. In fact, RVNL day's high close to 620 mark, now much lower, even IRFC. The other set of stocks that also today seem to have cooled off are the shipbuilding companies. So look at names like Garden Reach Shipbuilder, look at names like Cochin Shipyard, look at names like Mazgaon Dock. These stocks too today seeing a bit of profit booking. Now moving on, rice stocks today are buzzing in trade as reports suggest that the government may review restrictions on rice exports. In our segment Midcap Spotlight, Vamakshi will be focusing on the rice stocks.
Well, absolutely. KRBL and LT Foods, all of these counters are abuzz in the trading session today after reports are suggesting that the government may review restrictions on rice exports. Now, before we get into that, let's also understand the current landscape, the current restrictions in place. The first one being that basmati rice can only be exported above a set floor price, that is the minimum export price or MEP. Keep in mind that the government revised the MEP to $950 per ton last year itself. The other restriction is in terms of parboiled rice exports. They are subject to nearly 20% export duty. Non-basmati rice and broken rice exports are also completely banned. The proposed changes as per the report suggest that the government could replace the export ban on non-basmati and broken rice with a fixed export duty as in the case of parboiled rice. They could also reduce the minimum export price on basmati rice is what the reports are suggesting. Now, largely the impact is expected to be sentimentally positive for both of these counters, and I say sentimentally positive, and that is because in the past con calls, both of these companies have highlighted that the average realization for basmati exports is already above the MEP, so largely there is no impact as far as this restriction is concerned. Non-basmati accounts for a relatively smaller portion for them as well, and as a result, there is not much of an impact there as well. So overall, this development seems only sentimentally positive for all of these counters.
Okay, all right, Vamakshi, thank you so much for joining us with all those details and for that clarification as well, that it is just a sentiment positive on the back of which we are seeing those big moves in rice stocks today. But Kalyan Jewellers, Senco and Titan are in focus following their Q1 FY25 business updates. Mangalam is here with more details and analysis of what happened with each of them. Mangalam.
Well, the jewellery sector is, the verdict is out now for the first quarter. And as you see, Titan's doing well today. Kalyan Jewellers is seeing some bit of profit taking, and the big decline is what we're seeing on Senco. What do we know so far of the updates that are there so far? Kalyan has actually shown a revenue growth of 29%. Senco has shown a growth of 11%, whereas Titan has shown a growth of 8%. Now you would wonder, why is it that Titan, being the biggest of them all, is growing at the slowest pace? Well, the biggest reason is that because it is the biggest of them all, base effect may be catching up. If you look at the last year's revenues for Titan, Kalyan and Senco, Senco is just about over 5,000 crores, whereas Kalyan is around 18,500 crores. Titan's jewellery business did revenues of almost 42,300 crores, with margins which are 500 basis points over and above the industry itself. So as a result of which, even if they added around 11 stores in the first quarter as against Kalyan, which added 13 stores, on a high base of 490 Tanishq stores, 11 stores is a 5% addition, whereas, we are seeing 11 stores is a near 2% addition, whereas for Kalyan, a 13 store is a lot more. It's a 5% addition. And for Senco as well, which has 165 stores, 6 store addition aids their growth. So if you look at the headwinds and tailwinds of the industry in the first quarter so far, the biggest headwind is a 20% increase in gold prices. There were lower wedding dates, there was the heat wave, elections, all of that impacted overall consumer sentiment. But the big tailwinds came across to a lot of the smaller players. So we had store expansion. Akshay Tritiya actually did well. So telling you that underlying demand is good. It's just that the street is waiting for more occasions. Higher growth coming in modern formats, likes of Carrot Lane and Candere for Kalyan Jewellers, as against the overall company growth itself. So what is it important to track going forward for Titan and all the other players? For Titan, additional penetration of stores. They're still at around 490 stores. Let's see at what pace can they increase Tanishq stores, and at what level of the unpenetrated areas do they go ahead and open stores. Faster growth of newer players is something that we'll watch out for, and growth in optionalities for Titan along with the competitive intensity. And finally, if you look at the valuations, Titan trading at around 53 times, Kalyan Jewellers swiftly narrowing that valuation gap at around 41 times, and Senco trading at a big discount to the other players. But then again, it's the Titan versus Kalyan valuation gap that we need to keep an eye out on.
Thank you so much, Mangalam, for putting that into perspective for us. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, the benchmark indices continue to trend higher. The Nifty continues to hold above the 24,400 mark. The Midcap index continues to trend above the 57,000 mark. We had the Amphi numbers just now, and the numbers were quite strong. We'll wait for the SIP numbers. Some stocks from the broader end of the markets that are doing quite well. Have a look at Rain Industries. Stock up almost 6% in the session today. Union Bank yesterday came out with operational details. Good set there. Stock up almost 5%. Have a look at Apollo Tyres today. Tire stocks recently have taken price hikes, and this is something that is aiding the up move as far as the stock prices are concerned. And certain sugar stocks today, like Balrampur Chini today, are doing quite well. Apollo Tyres, Balrampur Chini, even the Pharma pack last couple of trading sessions has been under the weather. They have seen some selling pressure, but Aurobindo Pharma today has bounced back quite sharply, up almost 2.5% in the session. But that's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.